everyone. This is another episode of review of Bitcoin price action from Investing with the Difference. Yesterday we had looked at the Bitcoin chart and we saw these trend lines. Uh, let's see where we are doing today. Before we jump into this, I think it looks like the price is not doing very well on our trend lines, but I wanted to highlight a few facts before we jump into the details. If you look at my settings, so I'm using a log scale. So Bitcoin traditionally has worked better for me when I use a log scale rather than the linear scale. It's not a strict rule. Some chartists use log scale, some use a linear scale. So I think overall you can use any of them. But here, as you see on the top trend line, it worked very well for me. As a log scale, we can justify that it is bouncing right from this trend line. Now, and one more thing you need to understand is trend lines are almost like approximate, because if you see, this is a very big range and some people can draw it like exactly on a certain point, or some people can draw it from maybe this line. So you can always readjust them. So I thought before we get too pessimistic about this drop here today, let's see if we can readjust this trend line and see if we can match a different points. So Bitcoin is very volatile, so you don't have to worry about minor adjustments to trend lines. We are using Bitfinex exchange. Price sometimes can vary between two exchanges by a few $100s. So you have to be very careful when you give too much attention to Bitcoin trend lines. They give you an idea. They are, as I said, very approximate. So because it's a big, very important trend line, so I'm trying to I have to give a little more concession to this and see how it behaves. So if we draw it like this, even though we are still falling as we speak, we have gone below 7,600 on this particular exchange, there is still a chance that we can justify that we have not really broken down. But this is just an example I was trying to show. But let me put it back. I don't want to change the trend line which I'm using. So from all practical purposes, we have broken down, and there is a very good chance that this can be a very negative price action today, and we go all the way down to at least 6,000 and maybe more, right? Means we need to look at historical data. We have seen more than 70% drops quite a few times on Bitcoin, so this is not going to be the first time when this happens. There are a lot of chartists who are predicting going all the way down to 3,000 and so on. Then, as I said, some people use linear scale, so we should always try out. So as you can see, from a linear scale, this top line would have been broken. This was the trend line, and we had broken out, but it was a failed move. This is the reason I went back to my log scale, but now it's not. Let's delete this. It's not relevant anymore because we are more worried about the downside move. Again, I will delete the log scale trend line, and let's try to draw what we can see on the linear scale. So if we use these points on the linear scale, you're seeing that this long-term trend lines in 2017 July, we had hit 3 points, so it's a solid trend line, and we can have some support here, which is pointing to somewhere close to 6,900 or between 7,000 range. So this is now becoming another probable support. So while we're talking about it, the people who are new to technical analysis, you need to understand that technical analysis is not an exact science. What it is telling you is there are a lot of ways how you can draw these lines. There's a lot of ways you can define a trend, and ultimately it is giving you a probability. So earlier we were going with the log scale. We were looking for holding, and as you can see, I talked about this reversal candle here. If you look at closely, So you see this is a reversal pattern, which was very promising. And the next day action was not quite convincing, but it was still justifiable because we made a new high. But as you see, this candle has almost negated this reversal. So that's why we have to go to drawing board and we have to start drawing a new line. So now this is what I'm thinking may act as a support. Again, it's a probability. You can, but one thing is for sure that we have now rejected this particular candle, and now we are at least staring at a $7,000 kind of a price. So, which is not a small drop from even from Bitcoin standard. We are talking about another 10% drop. So this is not looking good for sure. So this is definitely a sign of bearish trend. Now let's go back and see how the rest of the market is doing. So I'm looking at the coin market cap, and you see that typically when we get into a bearish trend, the other coins fall even harder. And this is again not a good sign. That means it's pretty negative all around. We are looking at big drops on most of these coins. So I would say that this is not a good outcome on a day when we were hoping that we will take support. So now again, what are the levels to watch? Based on this new trend line which we found in the linear scale, we have some chances of it taking support around 7,000. Other than that, we can look at 6,000 area, which is the last low in the drop which we saw in early February. So these are the two levels we can find support, and the new entry can be seen. Another worrying sign is, you see here, this was kind of a double top in short term. So this is going to be a very major resistance when we go up, but that is still too far away. So we need to worry about these two. Let's have a quick look at 1 hour chart if you can see something happening in recent last few hours. And as you can see here, again, it's looking very bad. We are looking at a very, very fast drop, and there is no help here. It's only looking down. We are nowhere close to going and reversing here. And a quick look at a 4 hour chart will tell us nothing new, I believe, but we should still have a look. And let's go back to 1 day chart. So one more thing we need to understand is we are way below now. We are way below 200-day moving average. So this line you see here is 200-day moving average. We dipped below it in early February, but we quickly recovered, and this was a very promising sign. And then we started moving above 50-day moving average. Now, if you look, it's almost certain that the 50-day moving average will cross 200-day moving average on the downside. And last time it happened was very long time back. So we need to go all the way when the price was below $1,000. So we are talking about, and that was for a very short term. So hopefully this time it will be the same. And what we need to worry about is the 2014, which was a big bear market for Bitcoin. When this happened and 50-day moving average remained way below 200-day, and we had seen a drop almost to $182 from a high of $1,100. So you can see this was almost a 80 to 85% drop. So this is why I think some of the chartists are talking about $2,000, $3,000 price prediction. So again, it's a probability. Charts don't tell you everything. Nobody knows the future. We are mostly looking at what are the probable areas. Times are different now versus 2014. We are looking at much more interest in Bitcoin. There is a good chance we may find a buying support on some of these trend lines or the previous low. We have these two. I think if we can draw another trend line here, which looks almost horizontal, so we can say that around 6,000 level, if we don't find support, then definitely till 3,000 there is nothing. So there is no support. There is no other areas which we can focus on, and also look at by that time we will. So in traditional terms, they talk about death growth. when the 50-day moving average crosses 200-day after a very long time, this triggers a lot of selling in traditional markets. Of course, we don't have too much institutional money as we understand. Of course, nobody knows how much money has already flown in. But if we believe that there is not much institutional money, I don't think these things are very important. There are a few chartists who are already talking about it, so we need to keep a close eye if we can recover above 50-day moving average to save us from this death cross, which is looking imminent at this moment, and the price action is not looking very good.